Board to chat about all those things. Sanjaya Gupta, the MD and CEO at PNB Housing, joins us on the show right now. Sanjay, hi, morning. Good to have you on the show. The lockdown clearly has further impacted the already strained housing finance sector. What is your reading of how things are going to pan out on ground? While right now everything is under lockdown and, so to speak, under standstill and frozen in time. But what happens once the lockdown wanes off? How badly do you think the sector is going to be impacted? Because, right now the fight is about bare necessities, about being alive. Buying a house comes very much later.
So I think one is that certainly, the operational robustness of organizations is really going to play a very major role on who survives and how well everybody survives. I'm very sure that everyone will survive. And the other thing, which is coming to our mind is the replacement cost of post the COVID-19 impact. Because, especially the real estate sector is not like an electric bulb, which you can just switch on after we say that the lockdown or the shutdown is overdone with. It will take long to get the project started because the labor has moved to their villages or to their hometowns. For customers, as you very rightly said, it will take a while to make that decision to buy their homes. And even for people who were in midst of making that decision of buying their homes or have booked their homes, to get the cash flow back into the project. So I think, and I will name it as replacement cost, because I think the cash flows are going to be impacted for far too long a period than just 3 weeks or 3 months. So it will take a good 6 to 9 months to come back to the old level.
Well, and I also wanted to talk to you about, the 3-month moratorium, which has been slapped by the RBI. Do you really think that's enough to provide relief to the borrowers, or do you still suspect that there are going to be NPAs which will build into the system?
See, and we have been deliberating a lot in our senior management team before we go to the board for our policy approval on the moratorium. And I think these 3 months are going to be dynamic. We cannot really forecast what will be the impact on cash flows and NPAs as of now. But the good thing that the Reserve Bank of India has said is all loans on your books on 1st of March, irrespective of the status of the loan. So that would mean that, you can really, so on one side, you have to protect some bit of your cash flows, because we also have commitments towards our salaries, our vendors, and our repayments, because NCDs are not covered under term loan. So maybe that, our bank borrowings get a moratorium for us, but NCDs, CPs, deposits, they will mature on time as they were scheduled to. So to protect the cash flow of the institutions, it is very important that we maintain the credit culture of the good customers. And as and when that sort of the COVID-19 endemic puts them into stress, we give them moratorium for the remaining period. That is my personal thought process, rather than giving carte blanche to the entire portfolio which is residing on your balance sheet as on 1st of March. So certainly, I mean, the real estate developers, the SMEs are going to come and opt for it first. But as our government has been protecting the salaried class by giving advices on making payments of salaries, etc., across the sector, I think the salaried segment is going to utilize it only when they require it, and not just take it as a repayment holiday.
So let's talk about specifics now. 3 months moratorium, but do you think that is not going to take care of the problems for builder loans?
I'm seeing not only for loans, construction activity which is the second largest employment generator, will require a far longer, I'm not talking of moratorium, but I'm talking of a relief, will require a far larger term to kick back into action. They cannot certainly kick back after you stop their sort of sites for 3 months. They cannot kick back overnight on the 91 day. And they will really have to garner a lot of effort, time, labor, equipment. I'm just giving you an example. For example, the concrete mixers got stuck. Now to restart a concrete mixer, first a developer or an engineer on site will have to take uh, a survey of has the concrete actually set in the mix. And if it has, then there would be a huge sort of, redeployment cost, which will be incurred. And that can only start happening. The impact of this shutdown or COVID-19 can only be assessed once it is over. It cannot be assessed completely during the shutdown period or during the COVID-19 endemic, because everyday situations will be changed.
Now, one side is moratorium and giving and doing whatever it takes to fix the entire cash flow problem. But what about new businesses? I would imagine that also would be at standstill right now. When do you think the business will start normalizing? Sitting at home or working from home, are you able to approve loans? How is that entire loan approval process moving?
Okay, so I mean, that way we are leveraging on our technology investment in a very huge manner. And as I've been saying, we are all working from home and we are working at about 80% efficiency. If you talk about capacity utilization, we might be working at 40-45%. So yes, approvals are happening, part disbursements are happening. So if you were to say, what are your priorities today sitting at home, and everybody sitting at home and working, the first priority is obviously the safety of our employees and their families, their morale, because that's also going to take a hit, and their economic well-being. Obviously, then comes the customer service. So customers on board have to be serviced real-time online basis, which is happening. Then obviously is the new business. So the new acquisition is not happening. Because as I said, our top priority is to manage the safety, well-being, health of our employees. So we have said there's no need to reach out to new customers, and customers are also not willing to meet salespeople at this point of time, and they're not making purchase decisions. And secondly, managing the liquidity, managing the cash flows, managing incremental, let's say, borrowings, and obviously the outflow. So 4 or 5 priorities are there, which are equally sort of important for a CEO of a lending institution as of now. And information security is another thing, which people have to be very, very sure, because I'm sure that, the not so good IT professionals sitting across the globe will not be looking at hacking databases. So the robust companies like ours who are working on private cloud, who has the data, so even when I am accessing real time our information, it is not on the mainframe system or not on the servers, but it is on a private cloud. So I'm just seeing a replica of that. So organizations which have invested hugely in technology are going to overcome this period of, I would say, shutdown, lockdown, whatever you might like to say, or even a stretched version of it. So just
All right, so appreciate your time.